guys, it's Brenna, the CEO and founder of The Mortgage Shop. I just wanted to come to you to explain how your credit score affects your interest rate on a mortgage. So there are different credit tiers of how it affects mortgage rates. So when we pull your credit, you get the 3 credit bureaus, right? Experian, Equifax, and TransUnion. We look at all 3 of those and we take the median credit score. Let's say there's 2 of you on the loan. We take the median credit score that's the lowest between you 2, and that's the credit score that will be assigned to that loan. So the credit tiers go from greater than or equal to 740, 720 to 739, 700 to 719, 680 to 699, 660 to 679, 640 to 659, 620 to 639, things of that nature. So as you keep going down, your interest rate will be higher. As you keep going down, you risk not being able to be approved for that loan. So if you're doing a conventional conforming loan or conforming any type of full doc loan, basically, it will look at your credit score. We run what's called automatic underwriting system, and that goes off of Fannie Mae or Freddie Mac. It will tell you if you are approved eligible or accept eligible, which means they've ran your debt to income ratio from what we've put in there. They looked at your credit score. They looked at your credit report. They're good. However, if you have a lower credit score, even though the guidelines say like, hey, if you have a 620 credit score, you are able to qualify for this loan, sometimes they won't accept it if your debt to income ratio is too high. And then your interest rate would be astronomical. Maybe your mortgage insurance would be astronomical. So keep that in mind. The higher your credit score is, the better interest rate options you will get. So let's say, you have an interest rate range from 6.5% to 8.5%. If you're perfect credit, your debt to income ratio is good, you may get that 6.5% interest rate, versus if your credit score is really low and, you have derogatory or late payments on your credit report, things of that nature, you may be in that 8.5% range, and then risk not being able to qualify if your debt to income ratio is too high. So keep that in mind. I will do another video on how to kind of get your credit up. There's different ways to do that. But right now, that's what I just wanted to explain to you of how credit scores affect your interest rate. If you like this information, you keep learning, like and subscribe, and I'll talk to you soon.